This is a much larger impact than anything that's happened in this space since the launch of stablecoins and the launch of Ethereum.
Hey guys, welcome back to Library of Wealth. Today we have Raoul on his forecast for the financial market. Powell says the reason why the market is disregarding the negative 2% GDP print is nobody understands what the current demand is. He doesn't believe we're going through structural inflation, but is willing to appraise it during the next bull market and economic upcycle if there isn't more of a supply of energy and commodities. Powell believes that the larger, quicker recession won't affect the market. The reason why the bond market is doing exceptionally well is because it's the most mispriced of all the assets. Let's listen to Raoul Pal as he gives his take on the future of the market and the impact of crypto policies. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
I've got a very variant perception here. I think inflation goes negative in 18 months' time. I think the price of oil comes down to $60. I think everybody's a supply side analyst and nobody understands demand. I think the ISM, which is the driver of the business cycle, or the best kind of monthly indicator of the business cycle, I think it comes down to about 35. So that's a kind of negative 2% GDP print, which I think the markets will ignore for the reasons I said before, and the fact that the euro-dollar market is already pricing cuts for January. I do think that I think we're talking now at turning point in the cycle, right? And everybody just always looks at where we are today. Inflation's at 8.5%. How can you possibly think the Fed will cut? Well, the Fed have cut every single time in history since 1960 when the ISM has gone through 50. They've either cut or paused. They only paused once, which was 2016. Every single other time they've cut. So they talk a game, but growth leads inflation. I don't buy the structural inflation side of the story for this part of the down cycle. I can consider it for the next bull market and the next economic upcycle if we haven't built more supply in energy and some commodities such as copper. But copper's been screaming at you that inflation is not an issue. Every single commodity, from wheat to copper to aluminium to everything, is down 25 to 50%. It's only oil and gas for the reasons we know. And I think oil comes down to $60 anyway. Now, year on year, that's going to give you negative 50% oil price. So the headline CPI is almost impossible to be positive because of the year on year comps. So I think, so to sum it up, bigger, faster recession. I don't think it impacts markets. I think, kind of as Kevin and Yurin think, I actually think markets are fine. I think the bond market does extremely well because it's utterly mispriced. It's the most mispriced of all the other assets versus the business cycle. So that's why I'm wearing my buy bonds, wear diamonds t-shirt. I don't disagree with Kevin that equities will do well. I just like the risk-adjusted return in bonds. I love bonds because they're easy ways to make money generally.
Powell says that if his view on the asset allocation process is accurate, then there will be weaker growth and the Fed will begin to come into the picture. He believes the most important thing to do is purchase crypto. Raoul says his preferred trade is in capital gains. This is because yields have too many pension liabilities and hurdles, while bonds are worthless because they cannot close the funding breach.
I think the most important point is, if I think of the asset allocation process, right, my view is weaker growth. My view is the Fed come into play, i.e. they stop somewhere set or op. I think the bond market rallies. What do you want to own? You want to own the furthest out duration thing you could possibly own, which is crypto, which is why crypto based exactly around the same time as the market starts picking up that the Fed were going to pivot. So this moment the euro-dollar market starts pricing in cuts, crypto bases. So that's how I think of the portfolio allocation. I love bonds. I think they'll do well. I don't want them for yield. I want them for price appreciation. But the real game in town is going to be crypto. I'm just after capital gains. You know, where are bonds in a year's time? Probably at 1%, okay, in terms of yield. So capital gain is my trade. For yield, forget about it. These guys have so many pension liabilities or hurdles that, as you say, they have to do that. And we'll come into the ETH yield later because it's super interesting for these guys as well. But you're dead right. I mean, bonds really have no value, even in a pension fund, because it'll never close the funding gap. Everybody in the entire financial world is short upside calls on crypto, right? What that means is the more the price goes up, the more regulation changes, the more they have to get involved. I've seen a setup once like this before, which was the launch of the GSCI Commodities Index back in the late 90s. And basically nobody had commodities in their portfolio. Everybody went to about 5 to 10% weighting, right? The amount of buying was in the hundreds of billions of dollars. The magnitude of what needs to happen here and the fact that everybody's short means that over time, they all get flushed in. And all the conversations I have are with the biggest financial institutions on earth, whether it's the sovereign wealth funds, the biggest asset management firms, the biggest family offices, the biggest pension funds. I mean, it's on everybody's radar screen. And incrementally, every bit of news you get that's positive on regulation, or somebody like BlackRock showing the way, or somebody like Texas Teachers showing the way, or somebody like Fidelity showing the way, makes people braver and braver. You know, when you look at what Goldman is doing, JP Morgan's doing, I mean, you're giving confidence to more people. All they need is a bit of price action and they'll be in. This is a much larger impact than anything that's happened in this space since the launch of stablecoins and the launch of Ethereum. That's how big it is to me. But it's not an overnight, need to buy it now, it's going to go up immediately. I'm talking about structurally, you know, as Kevin said, as regulation eases, as people understand and have clarity, this becomes a monstrous asset for this entire new financial world. Yeah. Well, I'm max long, and I have been, and that has not changed, and I just keep adding. So that's ETH, Bitcoin, a few other tokens. I've got this fund of fund business. So invested in that across digital asset hedge funds to capture some of the alpha of the space. Look, it's getting a little bit overbought. I think if we're getting to trading tactics, whether we get a pullback soon or not, I think we rally into the ETH merge. I think it definitely happens. Whether it happens on the 15th, there's a story coming out that it might come out early. The 19th, it gets out of the way. As Kevin said, that removes some of the uncertainty of the space. Maybe that doesn't happen. You know, there's still a probability that something goes wrong. Then I think it's buy the rumor, sell the fact. It's pretty standard market operation. You buy that pullback with both hands. For what Kevin's saying, for what I'm saying about rates, for what you're saying about network growth, any big pullback you get from here, there's going to be a bunch of people saying, wait for the new lows. I just don't think you wait for new lows.
Raoul Pal notes that the entire financial world is short on the crypto upside. This means that the more prices increase and regulations shift, the more they have to be included in the crypto market. Powell says that regulations have had a bigger influence than anything in the market since the introduction of Ethereum and stablecoins. Raoul has always been max long on his positions and continues adding to his portfolio. He has invested across multiple digital hedge funds and has observed that many things are being overbought. Powell says that during this time in the market, it's smart to immediately seize opportunities and to not wait for new lows to come in. What do you guys think about Raoul Pal's take on the future crypto policies and regulations? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.